What's going on, everyone? My name's Obi and welcome back to Courtside Financial. If you're new to the channel, make sure you hit that subscribe button so you don't miss out on any videos, and also make sure you hit that like button because it really does go a long way in helping out the channel. Lastly, I'll link the free Discord in the description, so make sure you click the link and join if you want to be a part of the discussion before it happens on YouTube. New promo going on now from February 2nd to March 31st. When you open up your new brokerage account, you'll receive one free stock valued anywhere from $2.50 to $250. And when you make that initial deposit of $100 or more, you'll receive another free stock, and this free stock will be valued anywhere from $8 to $1,600. Lastly, cryptocurrency is now available on WeBull, so you can trade cryptocurrency on the platform with zero commission. So today we're going to be talking about UXIN. That is the correct pronunciation. Thank you guys for pointing that out. It's currently 7:25 p.m. Eastern time here in Michigan, and the stock is currently trading at $1.23. It is up 4.35% for the day and up 2.5% in the after hours. So today I want to talk about the NIO CEO William Li investing in UXIN a while ago. I want to talk about who is UXIN's most relevant competitor, and I want to talk about the top institutions holding UXIN. So for those of you who don't know, UXIN is an internet company. It's a used car dealer in China. A lot of people are comparing this to Vroom and calling it the Vroom or Carvana of China because China wants to double its used car market by 2025. So that would mean that there's a lot of room to grow here. But this stock is obviously risky. You know, the company is undercapitalized just looking at their finances. I've talked about that in previous videos. So this company is a risky stock today. And then on top of that, I look at it as a long-term investment. So it's a stock that for myself personally, I'm putting in the file cabinet as a long-term investment. And I'm not expecting too much out of it too soon. So if you haven't watched those previous videos that I did on UXIN, I recommend that you go check them out. And of course, we're going to get into their institutional investors, but I did mention that the NIO CEO invested in UXIN a while ago, so let's talk about that. That's right, we know William Li has worked with Hyundai and UXIN in the past through BitAuto, but actually, UXIN was founded in the year 2011, and in the first year of the company's business, Hyundai managed to get an investment from William Li. It refers to William Li here as the godfather of travel, which doesn't really surprise me. He's certainly done a lot for travel in China. Outside of NIO, he's been involved in a lot of different travel related companies. So it's unclear if William Li is still invested in UXIN. He could have for sure got out at an earlier time. He could have cut losses. After all, this is a turnaround play. I don't know, and I'm not here to speculate on that, but I just thought it was pretty interesting that at some point he was invested in UXIN, and I personally think that he still does believe in the company because he's very bullish on the used car market in China. So here are the top 10 institutional holders of UXIN: Wells Capital Management, Hillhouse Capital Advisors, BlackRock, Bailey Gifford, Renaissance Technologies, Oppenheimer & Co., Wells Fargo Bank, Credit Suisse, Aberies Investment, and Pensera Capital Management. Some standout names here. One of them is Bailey Gifford. They made a fortune on NIO and understand the Chinese markets very well. They also gave NIO a $300 price target. BlackRock needs no introduction. They're an ETF leader. Their stock has outperformed the market for the past 10 years, delivering an annual rate of return of almost 17.5%. You know, I mentioned in the past that I'm looking to compound my money at 30% for the next 10 years. Hopefully that's possible. Maybe that changes in the future, but you know, that's what I'm looking at, and that's kind of what I'm aiming towards. Wells Capital Management is part of Wells Fargo, if I recall, and they are the biggest holder of UXIN with around 9.5 million shares, and they have a 3.38% stake in the company. Also, UXIN is backed by Chinese tech giant Baidu. They have over a $1.2 billion stake in the company as of 2019. I'm not sure if that position has increased or decreased since, but you know, I'm still actively researching this company. So it's time to talk about UXIN's main competitor. There are a lot of players in the used car space in China, but for the sake of this video, I'm going to talk about their main competitor, and I'll explain why in a second. Disregard the amount of capital raised on this PDF because these numbers are not up to date, but as you can see, for C2C, for the C2C category, consumer to consumer, there's 3 companies. As I mentioned, I was going to talk about UXIN's main competitor, and that would be Kaixin. These 2 companies are both B2C companies, so business to consumer. I'm going to get to Kaixin in a second, but I'm going to start by saying the used car market in China is certainly an emerging market. So it hasn't matured yet, and there's a lot of room for growth here. And of course, the Chinese believe so as well. China's used car market will allow China to transition towards an electric future. As we know, by 2035, all new cars made in China must be new energy vehicles. So what's left of the existing ICE vehicles must be properly circulated through the ecosystem before it organically and eventually becomes used electric vehicles in China's used car market. I make that point to say that there's viability for China's used car market. Now you got to think about it. In America, we have a used car market. It's massive, but you got to ask yourself the question, does everyone buy a car from the same place? And the answer is obviously no. Now, even when you think about these new internet companies like Vroom or Carvana, they're both doing well. This market is going to be big enough for multiple players is what I'm getting at. So what's the difference between UXIN and Kaixin? Kaixin does a lot of the things that UXIN used to do. UXIN is completely changing their business model right now. And the reason for that, according to the company, is that a lot of that stuff, getting rid of it or cutting it is going to help out with future profitability. So I actually kind of compared the 2 right here. Kaixin sells premium cars. They have their own financing unit. They have online distribution. They have offline distribution. They have an inventory owning model, and they have affiliate sales. So they do leverage third parties as well. For UXIN, they sell all types of cars. For UXIN, they have an online distribution model only. They cut their offline channels. Their target market is more cost-conscious customers.
Because, we focus on how to selling the used car from big city to the small city. In China, the problem is we have 800 million population that live in a small city. Yeah, even a small city with 500,000 population, they only have almost 100 local used car. Yeah, how to make customers, they can buy a satisfied used car when they live in that city. That's the key point. And what UXIN will solve.
So you facilitate that market.
Exactly.
And on top of that, they have an inventory owning model. They do not deal with third parties or affiliates anymore. So I personally like UXIN better. I think that there's more opportunity there when it comes to used cars. I think there could be a market for both. But I personally would rather invest in a company that's not limited to just selling premium used cars, because I think there's going to be a lot more people who are willing to buy from UXIN. More oftentimes than not, people who are looking to buy a used car aren't really looking on the premium end, but obviously China has cultural differences. I'm not going to act like I completely understand the market over there. Maybe it's different. Let me know down in the description below. But other than that, that's going to be it for this video. Make sure you hit the like button. Make sure you hit the subscribe button. Leave me a comment down below. Click the link in the description to join the Discord. Stay tuned. More videos coming out on companies that I'm invested in this week. And as always, thank you guys for watching. I'll catch you guys in the next one.